We could be on the hook for
Test it.
$25,000 and on the
I was looking through the, I was looking. I was kind of curious.
Different sizes.
I figure you have your own, but
Like special police helmets, or are they just?
no, it's like.
Bowl, are we ready? Yes. Do you want to start? Okay. All right, call to order the January 3rd, 2019 Ways and Means Committee meeting. Roll call
Alderman Dimmitt,
here.
Alderwoman O'Neill, Alderwoman Sims,
Here.
Alderman Weggie.
Here.
Thank you. Do we need to, are we recording this? Yes. Okay, so we need to have the microphones on. Alderwoman O'Neill. There you go. Thank you. Do we have any changes to the agenda? Any objection to approving the agenda by acclamation? Seeing none, we will approve the agenda by acclamation. Next item, drop down to 5, report of committee chair and alderman. I have no report.
None, thank you.
Alderwoman Sims.
No report.
Alderman Weggie.
No report.
Item 6, city administrative report. Ms. Conde, would you like to?
Thank you, Alderman Dimmitt. Actually, I would like to recognize Treasurer Reinders, who's in the audience. And the reason being is when the city issued an RFQ for municipal advisor investment services, Karen and I relied on him a lot to assist us. And everything we've done is in compliance with the city's investment policy. And I just wanted to give you an opportunity if you had any words to share with the Ways and Means Committee.
Thank you very much, Bola. I actually, I appreciate the kind words and you putting your faith in me. I think you know I've served the city for almost 30 years of the 33 I've been a resident, so I really appreciate it. We do have with us tonight Brad Lukens from Arbitrage Management, and I didn't know where on the agenda it was appropriate for Brad to give his presentation.
It's right here.
Is now a good time
Now.
to do that? Okay, great. So I'd like to introduce Brad Lukens. He'll explain a little bit about who he is, what his firm does, and what he's been doing for the city.
Great, thank you.
Evening. Thank you for carving out some time for me tonight. I appreciate it. I figure maybe I'll just take a quick minute and explain what it is that we do as a firm and what we do for other municipalities throughout the state and for you guys. So our group is Arbitrage Management Group, and we've got a little niche, and that is in the investment of bond proceeds. Primarily, that's in the realm of project funds and debt service reserve funds. Sometimes debt service payments, but I'd say the lion's share is debt service reserve funds and project funds. So our niche started in 1992, shortly after the Tax Reform Act of '86. It kind of put some guidelines on tax-exempt bond issuing institutions' ability to invest their bond proceeds, ultimately to earn back what it's costing them to borrow it. There was some mismanagement and some abuse prior to '86, back when interest rates were really high, and so the government stepped in and enacted a portion of that. Those parameters kind of carved out and created our firm. And so what we specialize in is primarily it's an educational process for me. Most of my job is teaching municipalities and water districts and power authorities and colleges on what they can do within the very tight constraints of the bond issue. And I find that when the entities that help create this issue, everybody kind of stays in their lane and does what they're supposed to be doing, but doesn't educate you on other stuff. Bond counsel creates the bond indenture, the underwriters raise the funds, the trustee bank holds it. And so where I come in is teaching issuers their ability to invest it, to earn back what it's costing them to borrow it, ultimately helping increase cash flow and helping make bond payments. So I personally manage the investment of reserve funds and bond proceeds for about 80 clients here in the state and about 100 in the Midwest. I went through an RFP process with the city, and we currently, as of I think it was July, started helping the city invest a couple of bond reserve fund and project fund accounts. The 2014 COPS, they refunded a 2003 issue. 2015 TIF bond, it was another refunding issue. And the 2017 and 18 COPS. And we manage the investment of the reserve fund and the project funds. So what I'm yes, you do. You've got a copy of what I'm looking at. And so this is what I go over with my clients on usually a biannual basis, where I sit down and kind of refresh them on the securities that they're able to invest in, the types of the cost of borrowing, all the specifics on each of their bond issue. And then we just talk about what securities they hold, if there are any securities that they used to hold, which would be securities that were that either matured already or we were able to sell and book gains for the client. So the complete snapshot is always there in perpetuity for as long as we have the relationship. And if we want, we just look at the first page, the 2014s, you've got a reserve requirement there. And again, just to make sure we're clear, the debt service reserve fund was an amount that you guys had to borrow above what you actually needed. And it funds, it is there only for the purpose if you default. It'll sit there, in this case, until October 1st of 2024, and it's costing the city roughly 3.5%. Our goal with you and with all of our clients is to invest that $576,000 to earn back that 3.5% that has been accumulating since 2014. That term is called recapturing your negative arbitrage. The state and the permitted investments allow you the ability to go into municipal bonds. Our long-term goal, as we have with everyone, is to go into municipal bonds above your cost of borrowing after we break even on your cost of borrowing, which would then enable you to keep positive arbitrage. So it kind of can get kind of in the weeds. It's a little complicated, but each of the types of securities you can invest in are all very safe, fixed income types of investments, government bonds, high-end or high-rated commercial corporate bonds, commercial paper, municipal bonds, stuff like that. So fixed income, what that is you don't have to worry about stocks or what's happening today and any other day lately in the stock market. You buy at a particular price and yield. You're guaranteed that interest rate payment every 6 months. And at maturity, you get all of your principal back. So Bond Counsel has written all that into your indentures. Safety, liquidity, and yield, of course, is the primary concern. So the second page there just shows you the types of securities that you guys own. In October of 2018, we just split the portfolio into thirds. We do a lot, that's called a ladder. We do a lot of laddered investment strategies that rather than put all the eggs in one basket, if interest rates rise, this is the most conservative thing that that we feel that you can do with really any money. If interest rates rise, we have you covered because shorter term securities are maturing and can be reinvested at a higher yield, make you more. If interest rates fall, that means the value, the price of the securities that you own have appreciated in value, just like your house might appreciate very quickly. We could potentially sell those securities for gains, let the market stabilize, and go back in. So we feel this has served our clients very well over a long period of time, and it continues to do so because we don't have that crystal ball. These securities, you see how much they have earned since the day, and you'll see that throughout this, since the day that we purchased them. So they're basically on autopilot for Bola and Karen and Greg, but we are actively managing this account and looking for opportunities where we can improve your earnings. Otherwise, they will be there until the bonds mature, paying you interest every 6 months, and then we'll look to reinvest as they mature. This one, you only have $7,000 in money market, so we would just leave that there until another opportunity came along to reinvest. Any questions so far? I got through the majority of everything, so the rest of this will go a little smoother. The next issue is 2015 TIF. These are refunding bonds. You did not, with the first two, you did not have a project fund associated with that. So when that's the case, you don't have as much negative arbitrage that is accumulating. As a result of the Tax Reform Act of '86, you have the ability to invest your project fund money and your debt service reserve fund money to earn back what it's costing you. The project fund will accumulate a significant amount of negative arbitrage unless it's invested. This one and the prior one that we just talked about didn't have a project fund, so it's only accumulating negative arbitrage or lost interest at a rate of the $224,800 debt service reserve requirement. This one's costing you about 4%, and of course our goal is to earn that back. You're in the same types of securities as the prior one, and we created an investment ladder that's a 2-year, 3-year, and 4-year ladder. It's earning you a weighted average yield of approximately 2.73% on both. This one's costing you about 4%. The other one, I believe, was 3.5%. Prior to getting it invested, this money has just been sitting in the money market. And back in 2014 and 15, money market would have been about 1 basis point, 1/100th%. Money market rates have been rising in the last couple of years, but so have the permitted investments that you can go into. So it's all kind of relative. So we have a good amount of negative arbitrage to recapture, but we're on the right path. We've got kind of like a Band-Aid on the bleeding. We're earning closer to what it's costing you to borrow it now. And the last one is your 2017 and 18 COPs. Those will mature on October 1st of 2043. So far away. You have a debt service reserve requirement on the 17, there in the middle of the page, of $510,500. The 18 issue is $3,199,645. Combined reserve requirement is $3,710,000, costing you about 3.5%. The first page there is dedicated to just the debt service reserve fund allocation. The next one we'll get into, that's the project fund. So what we did here, we created a 2-year to 5-year investment ladder. You're earning about a 2.66, currently 2.66 weighted average yield. You'll see at the very bottom under historicals, when we first invested towards the end of July of 18, we bought some Toyota Motor Credit commercial paper that has since matured and been reinvested. That has matured since it was so recent, it has not been reinvested, and it's sitting in money market waiting to be reinvested. So right now, you currently own some U.S. government agency bonds, Federal Home Loan Bank, Fannie Mae, Fed Farm Credit Bank, those securities, and they mature between October of 20 and November of 23. I'll move on to project. I'm sorry, I've been moving kind of fast. I'm trying to respect your time, but if you have questions, please ask me. The next one is the project fund. This one, obviously the strategy has to be much different because this money has to be available prior to the date that you'll need it to spend for the project. So this is one that I have to work much more closely with Bola and Karen and Greg in doing their best to estimate when and how much they'll need available. For project fund money, we primarily, we really like going with commercial paper. You can only invest it up to 9 months. It's a 9-month maximum on commercial paper. Beyond that, it becomes corporate. And the primary, well, a couple of reasons with that. We buy domestic commercial paper. We bought GE and Toyota. They're the highest credit rating category. They're domiciled here in the U.S., and we have the ability to buy direct, which gets you a higher yield than if it was not direct. It's about the same yield as if it was the second highest credit rating. These commercial paper issues are huge. They issue commercial paper from probably 8 in the morning till 11, and it's in the hundreds of millions of dollars a day. It's just mind-blowing, and there's so many of them. So we originally did an allocation, and you'll see at the very bottom, we bought GE Electric commercial paper. Those have all matured. And then the very top there is what you have remaining that is invested. So you can kind of go through that. You see we've got one rung of Toyota Motor Credit that will mature in a month. The rest of it is in Treasury notes and U.S. government agency bonds, and they mature at various times as needed and with the quantities that are needed all the way up until it's estimated that the project would be complete. We're currently sitting on $9.5 million in the money market, so that could be improved upon, of course, if it was invested. I'm kind of waiting on some direction on that as far as how much and what kind of duration we can invest So far, since July, the end of July of 18, this project fund account has earned $165,000, and that's all net interest earnings to the city.
Said you're waiting on direction on how to invest the 9.5 million. From whom are you waiting on?
Well, I work with Karen Bola and Greg, but keep in mind, on December 31st, we had close to half of that just mature, so it's just a few days. We've done some reinvestments already, and I think there are quite a few moving parts with making sure that a reinvestment has the right amount and it matures at a certain time.
One name that's
kind of a
missing is
normal-
Craig as well.
Okay.
So based on property acquisition, and I know Greg, is that what you wanted to say?
I think it does, the property acquisition is really the, right, is the dartboard that we're at. So how much of the 9 million do we put to work right away? Obviously, it would be less than 9 months, but there's an opportunity based upon the yields that you see there to pick up much more than money market. Also, we did want to wait until this meeting to make sure that you're comfortable with our direction. We're, as Brad mentioned, we are using commercial paper and of the highest quality. We can take a much less risk approach if you're at all concerned about the commercial paper market, which at least myself and Brad, we don't share a concern that there's anything. I guess what we would recommend is continue to use commercial paper, especially with the Toyota and GE, the P1 ratings that we're using. But again, you all have the direction to say, okay, use these, don't use this. But for short term, right now, until we sit down and figure out what the direction is for the property acquisition. Essentially what we did, bend your ear for another minute, what the project team did is went out over 3 years on a monthly basis to figure out what our expenses are. So as you see these, the face values that might mature next year or June of 2020, they're really tied into specific events that will take place over the term of the project. And what we've done is backed up a couple of months to make sure if the project's running a little quicker, that we're not holding off paying a bill for 60 days until maturity comes. A lot of the maturities are geared towards month end with the knowledge that the Board of Aldermen, they meet the first Monday of the month. So if they approve project expenditures the first of the month, what we don't want to do is hold off and say, well, we don't have a maturity until the end of the month or a maturity for two more months. So we've taken that into consideration. But again, the bulk of the short-term money is really pending the acquisition of property.
Anybody on the committee have any questions?
Just for my own edification, so how is arbitrage paid for this? Is it a percentage of the total proceeds under management?
Yeah, we make a commission. It's a transactional commission, and there's just a spread on the street when the bonds are bought or sold. So you guys haven't been billed. All the numbers that are listed here are all net yields to you. So just outside of that, we just make a kind of like a real estate agent, transactional commission.
If I could just add to that too, part of our RFP process was to analyze the fee structure of those that responded. And from a commission basis, depending on what you're buying, if you're buying commercial paper or treasury notes or government agency, commissions will vary based upon the type of asset that you're buying. What we did stay away from was paying a fee beyond the commission. What we made sure is that as we did our analysis, the commissions were all in the same ballpark. Net, they were all in the same ballpark. But several individuals, firms that did respond had either an additional annual fee or a custodian fee or some form of management fee over and above that. So from Arbitrage Management's fee schedule, they were very competitive obviously, and we're the most competitive from a fee perspective of those that responded.
And there is some risk that we're taking on. So, I mean, take the Toyota, for example. The reason that that's a lower yield is because of the short term on that, because we need the liquidity.
Yeah,
for that
absolutely.
4.2 million. And there is some risk there. I mean, even though that's commercial paper of,
You know, yes, but I think it's, I would say it's almost catastrophic risk. You know, when we were talking earlier, 2008, when the market had problems, commercial paper had problems. Commercial paper and the firms that had problems, Lehman Brothers being one of them, had problems. But are we going to see that with these types of firms again? Not likely. Not likely at all. I think it would come down to your direction that you're just not comfortable in that market, regardless of how well financed these companies are. But I think it would be personally more of a doom and gloom perspective than anything else. And the risk isn't, I would say the risk isn't of failure. The risk is more of delayed repayment. And obviously, in a project fund, you don't want to have a 90-day paper that all of a sudden gets, you would have problems getting it, repaid or matured for a year or two. Those are where those types of issues are. Now, you could take the same, I guess, perspective on a government agency. It's a government agency. Could Fannie Mae, the mortgage association, have a problem? Sure it could. So it really comes down to how really bad or doom and gloom perspective would you have on rates.
I mean, so if the go-forward plan is, to continue using Toyota and GE, or will you pick other commercial papers to go forward? Because
we do.
GE's having trouble.
We continue to do Toyota and GE so long as they are the highest rated.
So what is,
So if for instance Toyota got downgraded, we'd likely not sell out a current position. We wouldn't reinvest in it. Now, we could take a look at selling out of a current position if it got downgraded, if interest rates are falling and we have the interest rate on our papers higher than current interest rates. As Brad pointed out earlier, that we have seen some of that. So some of our holdings are trading higher than the market because interest rates have ticked down a little bit. But if we saw if it got downgraded, then we couldn't reinvest in it because we're only permitted in certain ratings for commercial paper.
So I know you don't have in front of you the city's investment policy, but it's at the back of the budget document. Last year's and this year's, we started including that in the budget document last year. But there is a category under what is securities that are permissible, commercial paper. But obviously, it depends on your comfort level with any one of these securities.
And if you look at our current holding now, 10% of the portfolio is in commercial paper. So it's not as though we have the one item comes due in 32 days, I think, February the 5th. So again, it's very short term and will continue to be short term because of the need for liquidation or availability.
That
If
had
you
been
look,
purchased before.
I think you're on the 2014, is that right? And that was just for the,
Paula pretty well answered that too then. Thank you.
Any other questions for Mr. Lukens? Thank you, Brad. Thanks, Greg.
I appreciate your time.
Okay, next up on the agenda is item 7A, Finance Department, the November financial report. Yes.
I will just say that one of them looks really bad, engineering. What you don't see is what I used to create this, and I can see what the problem was, and it was trying to integrate two different spreadsheets, and that is not correct. That the next 60 days, and we're gonna have to do some reversals. Do I still think they're pretty much on target? Yeah, I do, except maybe, again, what we talked about, what was it, the fire one?
Yeah.
And then the road to bridge, again, I had Jackie, my accountant, looking at that. We were looking at the last 5 years. And that's another judgment call. It may or may not, depending on what we get in the next 60 days. Other than that, we're on target, and even going into December, what I was able to look at, it still looks like we're on target. I don't see any reason for concern on anything right now. And then another thing you're gonna see in 2019, starting in 2019, is, as you know, we budgeted like 12.5 million for the Manchester Road project. You're gonna see that on here and what's been spent, and it's accounted for a totally different way, because we don't pay it out of our accounting system. It gets paid from the trustee, but we will implement those numbers into that
Okay,
so that you will see what's being spent.
okay. And I will just point out to the committee, as you probably already saw, continuing discussion on the sales tax item, that's line item 4025. As we said, we've been following this all year in 2018, and what we saw is that there was, appeared to be an increase in the sales tax revenue compared to the prior year. And if you look through November 2017, we had brought in 4.6 million, whereas last year it was 5 million. So we were, $350,000 ahead of where we were the prior year at that same time. So that's good news, and we still need to bring in about 500.
Be able to really follow the trend on what's happening in terms of how that revenue's coming in.
Was that the
And
city manager that had that?
right, he's been there like 40 years
It's a very good
something.
spreadsheet
So
to
we're-
use.
And hopefully the management analyst position that we're trying to fill that person will also.
Alderwoman Sims? Yes. Alderman Weggie?
Yes.
Thank you. Item 9A, old business, council compensation discussion. Who's handling that, Bola? Alderman Weggie?
Am I handling it? All right.
Bola was
I have some
pointed to you.
questions for myself.
Well, I can kick it off. So I sent the survey to all our comparators, and 3 of them did not respond. They are in the mustard color bold highlight. When the city did the compensation survey back in 14, I think, we asked the consultant to also help us do a survey on what other cities pay their elected officials. So that reflects this, combined with the Municipal League's annual survey. So based on population, class of city, number of employees, provided you what each of these positions make, and added benefits such as retirement, ability to participate in the 457B, whether vehicles are provided or not, and no city provides a vehicle, no city provides a car allowance, however, mileage reimbursement is provided. No city provides health and dental and vision. Some do provide life insurance. Very few provide cell phones. I updated the spreadsheet this afternoon after talking to Alderman Dimmitt, because I guess prior to 20,
Also, retirement benefit, are aldermen allowed to buy health insurance through the city after they retire?
no.
Okay. Okay, so Kathy, you missed my impassioned speech last month, so I'll give it to you again. But basically, so the result of this is that we are the highest paid council of all the comparators. Now, we are basically put us at the 50th percentile, so that would be, hard numbers is 3515, so let's make it 3,600, so $300 a month, cut it in half as the going forward compensation. The way the ordinances are written, in that you can't change compensation until the next election, so this would basically, for the 4 that are running this next election, that would take effect after the election, and then for the next set after that fact.
I guess, just by way of clarification, 50th percentile is different than the 50%. 50th percentile would mean if we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 communities, that 8 would be above us and 7 would be below us, but, so it's not necessarily $3,600 is what I'm saying.
Well, so if you, first of all, you take out Brentwood, so it's 14 comparator cities.
Okay.
Right, because that's the population you're comparing to. The median would be the 50th percentile, which is 8 above, 8 below.
Right.
That puts you at basically 30, 35, 13, I think, is how that worked out. If you take the average, it's a little higher than that, but that's not the correct percentile.
Like, I would trust your math on that.
It was Excel's math.
Oh,
Excel did it for me, but
okay.
Rather than 75th percentile.
correct. Right, I want to send the message that we are holding firm to the 75th percentile and we are going farther ourselves. Again, the difference is that this is compensation for the pain and suffering of being on this board. It is not our primary livelihood. The 75th percentile means a lot more to the employees of this city as we are challenging them on expenses, on the $500,000 shed, on all these things. I want to come from a position of that we are doing it to ourselves as well.
Any discussion, any questions? Yeah, go ahead.
It would be easier to figure the math if they'd all been
I can do
listed
that.
month or year.
I did it too. I didn't bring it. I should have printed that out for you.
So Chesterfield's the high at that point then.
No, we are the highest. And then Maryland Heights is tied with us as well at 7,200.
Okay. Well, Chair would entertain, so are you making a motion then that we take to the Board of Aldermen a resolution to change the compensation philosophy for the aldermen to be in the 50th percentile, whatever that turns out to be?
Yes. Yes, 50th percentile. And it would be an ordinance because that is set by ordinance.
Okay. Okay. Do we have a second on that? Well, can I second that motion?
Yes.
I'll second that motion. Okay, let's have some discussion. Anybody want to speak in favor or in opposition to this? Alderman Sims, yes.
I appreciate the work that went into collecting this data. I am opposed to this resolution, and it's not because $7,200 a year means the difference to me of making a mortgage or otherwise living my life. This job takes a considerable amount of time. I frankly take a pay cut to work here out of building my practice. I don't believe that cutting this salary will in any way really negatively impact an existing program for a city that has such a substantial budget such as ours and a source of revenue. And I think that there's an even bigger unanticipated consequence to slashing this compensation. One, when the compensation was enacted as it is, those elected members were reelected, which I think is a statement from our citizens of an approval of that decision. And for how long has this been? At least 10 years, right?
At least, I want to double check it. You can continue talking while I verify that.
So, it's been several years.
It's been a long time.
Several years, several election cycles. So, I think the people continue to vote us into office. That must mean an approval of the existing compensation. But the thing I'm most concerned about is I think that you're going to choke off the applicant pool to people who will put their time in.
2007.
Put their time in, come here in the evenings, meet with constituents. If we're saying I'm only going to hope that people with means run for office, we're not trusting our citizens to be able to make decisions on a wider applicant pool. we already, I don't know if anyone has filed to oppose an incumbent or challenge an incumbent in this election cycle. I know there are days to go, but, I think that, for the amount of time, for, it's a modest compensation, we can afford it, and I think it's a legitimate concern that people won't do it. So I appreciate it. At first blush, the idea of tightening the belt and showing the example, I think the real consequence will be that, we don't get people to run. So those are my thoughts.
Anybody else have anything else? Any
My
other
thoughts?
thoughts?
Sure. Bola and some other people know that when I decided to run for office, I had said I would give my salary to charity, and I can't say that during a campaign. That's illegal, I discovered, but the first year I certainly did that and have been working on that. When I first was appointed to planning and zoning back in the 90s, there was no paycheck. You simply did it, and I think there were only 7 of us. Most of us showed up, and it worked just fine. The fact that we are now giving a stipend to P&Z doesn't seem to have made it any more responsible on the part of people who show up. So in at least one respect, I don't think the money has much to do with it. I think at this point, given the number of hours put in, it's very nice to receive something for it. If we went to 75 percentile or 50, it's immaterial to me. I think it might be a good thing to cut it in face of what the city is facing.
Okay. Okay, no other discussions? Roll call?
Alderman Dimmitt,
Yes.
Alderwoman O'Neill,
Nope.
Alderman Weggie.
Yes.
So we need this on a first and second. We're kind of doing this on the fly here.
You probably want to have 2 readings for
Yes.
this,
Okay.
separate readings.
Okay, so will this be on the January 7th?
17th, maybe.
17th will be the first time.
Right.
Okay. All right. Item 10A, new business, an ordinance of the city amending Chapter 125. Oh, this is our good judge. Want to come on up here and tell us that you want some more money?
The financial report and the pay scale. I guess I won't ask for a raise. The Supreme Court is mandating that we increase our court cost. Actually, they're mandating that we adopt the show me court system. They're making every municipal division go to it. As a part of that, they are requiring that we collect $7, what's it called, the court automation fee? It's titled the court automation fee. It's money that we will not retain, that we will convey to the state to administer this program. Will it save us any money by us not using Regis down the road? What does that cost? Okay, so conceptually, there will be some cost savings. The implementation of the show me courts is mandatory if you want to maintain a municipal division. I'm not really in favor of using it, but I have to. I'm not in favor of increasing the court costs, but I have to. Our current court costs are $22.50. With the authorization, I think for an additional $1 that we don't do, that's for training. So we're at $22.50. It will go to $29.50. And we need to adopt an ordinance in order to do that because our current court cost structure is under an ordinance. I think you guys have the sample ordinance in front of you. And we spoke earlier, in the ordinance, it says that there's an agreement that I would have to sign in addition to the city administrator that says we will begin collecting this upon the adoption of the ordinance immediately. Now, in the ordinance that you have in front of you, it says that we will not start collecting it until I say so, until we're fully up and running. Our time for up and running, I believe, is February 22nd. However, it's my understanding that even though there has been many deadlines for municipalities, there has not been one that has gone live yet. So I have no idea when we will actually go live, but I would prefer not to start collecting this fee and remitting it to the state until we go live.
Right.
And I think the ordinance itself has that provision in there.
Well, is there any way that we could we make a change to the ordinance so that we would not start collecting it until we go live as opposed?
It does say it in the ordinance, at section 2 at the bottom.
Okay,
It says the collection of the fee of $7 as authorized in section 1 herein shall not begin until the Brentwood Municipal Division Court has fully implemented the Show Me Courts automation software system, or until such other time as the Brentwood Municipal Division Judge shall order. So I think we have that protection in your ordinance, and
Okay.
If there's any problem between the Supreme Court, it's going to be a problem between the Supreme Court and me,
okay,
not you guys, so.
all right. Well, it sounds to me, based on what we have in front of us, we really don't have a choice. If we want to continue to have it our own court, we have to allow this. We have to use the software program or whatever
Like I
it
said,
is.
there may be some savings down the road. When
Right.
we stop using Regis, but
But again, we're not paying for it. It's
we're not
the
paying for it,
defendants that are
the,
coming in front of you.
The accused.
The defendants, right. I didn't say the guilty, just
I didn't.
defendants.
There's a presumption of innocence. It's the accused.
Okay. All right.
And it's my understanding, well, I guess I'm not certain. I'm presenting it to Ways and Means. It's my understanding, obviously, it's something that the full board will have to vote on.
Right.
I'm not certain if I have to present it to the entire board. I prefer my Mondays not to be here, other than court. So I'm not sure how we can handle that. I'm happy to be here. If I have to be here, if you guys say, look, you have to be here for the whole board, I'll be here.
I think we can Skype you in, maybe, I'm not sure.
You can Skype me in from the gym.
Accolada,
Get you
right.
in from OBs.
Yeah,
All right. Any questions? Yes.
sure. Well, we are on part of the group that is required to go live, I think, on February 22nd. I have no faith that we will go live on February 22nd. And that's just based on, there have been I believe there has been some courts that were supposed to go live back in November. Is it? Oh, July. And none of them have gone live yet. So that's why I'm hesitant without that protection in the ordinance, I'm hesitant to start collecting this fee. I don't want to start collecting it and just saving it and remitting it, monthly for literally nothing, just on principle.
Okay.
So,
When's our first meeting in February? 7th? Yeah,
February.
Okay,
First Monday is the 4th.
4th. So if we had it set up, so the second reading of this would be the 4th.
or the 18th. I mean, if the second reading was the 18th, then
Okay.
that would be, I think we'd time it well.
Okay.
Hamstring,
All right. So we need a motion to take this to the board then, Bola? Yes. Okay. Chair would entertain a motion to take the item 10A to the full board, I guess in February, for the first reading, the first meeting of February.
So moved.
Okay, we got a first and second. Any other questions? Roll call, please, Shelley.
Alderman Dimmitt?
Yes?
Alderwoman O'Neill? Alderwoman Sims?
Yes.
And Alderman Weggie?
Yes.
Okay, thank you. The next item is 10B, the purchasing policy discussion. And I will just tell the committee that this came up, I think, as a result of some discussions that we had at the one or two of the aldermanic meetings in December of 2018. And the reason for that was presently the staff has the ability to, or has to come to the board for most purchases over $2,000. And staff is requesting that this committee look at increasing that limit so that they have some more flexibility. And in response to that, or as a part of that, staff's gone out and, I guess, surveyed some different municipalities. And are you want to present those to us? You have them in front of you. We just got them tonight, but Bull, I don't know if you want to just talk briefly about what this is and find out, I guess, our risk tolerance.
What we would end up adopting would be based on the board's risk tolerance. So not all our comparators responded to this survey request. I sent it to all municipalities throughout the state. So I did hear back from Chesterfield, De Pere, O'Fallon, Missouri, and some in the Kansas City area, Platte City, Rolla, City of North Kansas City. And it seems that, and I was also advised to check the city of St. Peter's locally here, that they seem to have one of the best straightforward purchasing policy. And what might eventually happen is an opportunity for us to do a wholesale change to the city's purchasing policy. But to start off, we would $5,000, department directors 15, and then you have to consider the size of some of these cities and their total budget plays into all of this. And then division managers, they have division managers at 4,000, and then supervisory personnel at 2,500. So as to start off the conversation, I just wondered what would be the risk tolerance that you and the board would be able to live with, so that as we start to do more survey, I know what I can bring forward.
Do we have De Pere's in here?
So there is an email, let's see if I included it. Let me. Let me pull that up. I did not print that. I thought I did, so. So De Pere says that their policy used to be $5,000. This is from 2006. And since April of last year, their Board of Aldermen has increased the spending authority for their city administrator to $10,000.
Okay. The only reason I was asking that, it seems like there's some fair amount of similarity between De Pere and
Yes.
and Brentwood.
Yes.
Both population, their aldermen are getting compensated a little bit higher at $575 per month. But okay, well, I personally would like to have some time to take a look at
Sure.
what
There's no hurry.
provided us. But I open it up to members of the committee for any questions, any thoughts. You might be able to help BOLA and staff in terms of giving them some idea, some direction of where you would like to see them go. Yes.
So I think the first question is really the risk tolerance of what are those thresholds, that we're comfortable with. But I think part of that is also kind of what is the process, right? So this is about streamlining and giving everybody the agility they need to make quick decisions. But is there a way that we can have checks and balances in there that don't slow things up? So for example, I'm just kind of making this up as I go, but I like North Kansas City's, right? Where it, up to some of value, it has to be approved by the city administrator, it has to go out for a certain number of bids. Is that an opportunity that, an email could be sent to the board saying, hey, we're doing this, right? Just to give a heads up. And then what is the impact of that coming through the warrant list? If, the board decides that something was totally incorrect and was not a right thing, what recourse do we have? And I guess, how do we mitigate that risk? Is that an opportunity on the warrant list of, here are open, non of city council approved items that we're considering, at least to give a heads up Again, just to, I guess, keep everybody in the loop so that we mitigate that risk instead of just being surprised when it shows up on the warrant list. So I think that should be part of the conversation too, of what is the process?
And what is the process presently? If it's over 2,000, you have to get approval from the board, we know that.
It goes on the warrant list.
If it's over $10,000, there has to be
We
a
go through-
formal
yes.
bidding process?
Yes.
And is there something that triggers the need to get quotes? Or is there a
No,
certain
it-
threshold
it
amount for that?
Well, it depends on the need for the item
Okay,
and then the cost of the item. So I think the minimum number of quotes we can get, I'm looking for the purchasing policy, is 2. So formal competitive bidding shall be procured only after obtaining formal written bids when the value of the proposed procurement is in excess of $10,000, or when directed by the Board of Aldermen, or when required by the laws of the state.
so if we, hypothetically, if we raise the threshold from 2,000 to, I don't know, 10,000, we wouldn't see those things on the warrant list unless they exceeded $10,000.
No, you would,
Because right now, we don't see anything on the warrant list usually if
under.
it's under 2,000.
Right,
So
exactly.
if we increased it
You're
to
right.
10, we wouldn't see anything under
Right,
$10,000
right,
on the warrant list.
right. But we would issue a check request. So
Right.
right now, we do a check request.
Right.
So, and that goes in the city administrator weekly report, so you'd have to look in there to see it.
Well, okay, the one thought that I have on this is, I certainly don't have a problem, I think we made that point during the aldermanic meeting. I don't have a problem with providing some more flexibility and freedom to staff, so they're not coming to us for these smaller sums. However, I do have a problem to the extent that it's being applied to the certificates of participation monies, simply because we don't have the board does not have a real handle on how that money is being proposed to be spent. And we know it's $12.5 million for this year, and, the first budget that we got, it was just a lump sum, $12.5 million. And if we start then giving staff, we say, okay, we're going to raise it to $10,000, we don't know how that money is going to be spent. And so I would be I would prefer to keep it at a smaller sum for the COP money, so that, since we don't know how we're going to be spending that, and make these changes to apply to everything else, just the normal budgeted funds, unless I would support it if we can get some more of a breakdown.
Right, we're working on that. It's a little tedious, but I think that maybe 2 meetings ago, I don't remember exactly, we provided some category breakdown
Right.
of that 12 million.
Right.
So we're working on, based on all the contracts that we have, what is called for in terms of what's in each of those contracts or agreements. So then that gives you a better idea, and then once we present that, if you want to take another look at it, then you can.
Right, right. Well, that's just philosophically how I feel about increasing this. And until we get a better breakdown on that 12.5 million, or however we're going to spend it in 2020 or 2021 going forward, I would have a problem with changing it as to the COP. Any other thoughts from committee members? Okay. Yes.
I believe that might be Platte City, but I will check and share that with you before you leave tonight. Chapter 9, okay. Yeah, I will verify that.
All right. Next item is, the lease between, 10C, the lease between the library and the city, we're passing on that, right?
So yes, no action at this time. There was the state auditor's report that indicated that the city has not entered into a current written agreement with the library. The one we have is as far back as, I think, 1947. And so we've been working with the city attorney to make that agreement a little bit more robust so that it accurately reflects all the services that the city provides the library. I know that the HR manager's been looking, because we help them execute their employee handbook and manage their benefits. Also, the finance department helps them with all of accounting services and banking services. So we want to make sure, and then, of course, they're in our building. So we want to make sure that this agreement reflects all of that. And then we'll bring that back to the committee, and then, based on your direction, we'll have a conversation with the library.
Okay, thank you. Item 11, citizen comments. Any citizen care to come up and address this committee? All right, the chair would entertain a motion to adjourn.
Second.
All in favor?
Aye.
All opposed? We are adjourned. Thank you, everybody.